So let's look at the results. What's up traders, welcome back. Today we'll be going through an easy and mechanical method that you can use to find daily buyers. It cannot get easier than this. The rules are straightforward and you can use this method on any strategy. We're going to start with the bullish conditions. We only have two conditions for a bullish day. It's either one or the other. The first one is very straightforward. So on your daily time frame, on whichever pair that you're going to be trading, every day when the market closes, you're going to check if the current daily candle has closed above the previous daily candle or not. If it did that, it means that you're supposed to be bullish the next day no matter what. Remember, we are following a system. So on this day, you're only going to be looking for bullish opportunities on your lower time frame. Let's look at the second condition. It's also straightforward. If we reject the previous day's candle's low and not closed below it, we show up at our trading station with a bullish buyer's mindset no matter what. Those rules are important for your psychology. You will see why. So you can see that right now, we have the first condition again. We have closed above the previous day's candle. So what do you expect the next day, no matter what? A bullish day. Most of the time, this condition is going to occur because of the fair value gap. You'll find that the previous day's low was just part of the fair value gap's high. But even if it's not, just follow the system. And obviously we're going to test this on the market. So I'm not going to go through the bearish conditions because it's just a mirror of the bullish conditions. Meaning it's the same rules. So you can pause the video and compare it on your own. So let's see how this works on an actual chart. I've accumulated a month worth of data back to back without skipping days to see how it will perform. So let's go through it together. So we're on US30. I hope that you remember the rules. So this is the daily time frame on US30 for your own back testing. Don't just take my word. We failed to close above the previous day's candle. So the next day, you anticipate the opposite direction. Now that we have closed below the previous day, we anticipate the same direction. Did we close below the previous day? Of course. So what's your bias? Same direction. New day, same thing, different day. We have closed below, so our direction is still bearish. Close below the previous candle. What's the direction? Bearish. Oh crap. Obviously this was coming. On this day you might have taken an L or a break even. Or maybe no setup. This is part of the game. So we didn't get to this low. So this day failed to close above the previous day's high. It only rejected. So what's your bias for the next day? We failed to close above, so we go for the opposite direction. We didn't get to this low, and the current candle is an inside bar because it's inside the previous green candle. So now you can follow the direction of the previous candle, or you can take a day off if you are confused. We've closed below this low, so what's next? Bearish. We closed below the previous day, so what's next? Bearish. Oh shit. Took another L. Closed above the previous day's candle, so what's next? We are bullish. Failed to close above the previous day, so the next day you are bearish. Took another L. It's part of the game. I bet you guys were looking at this order block, this fair value gap, for confirmation. But the market will do what it does no matter what. It's not gonna stop because you drew a line. We have closed above this candle, so what's next? Christmas Day. We closed above this candle, so our next candle must be bullish. Another W. Closed above. Next day, no movement. Let's assume you took an L or a break even. So this current candle is in between the previous day's candle, which means it's an inside bar too. So we take a day off to avoid being confused or being too technical with a 50-50 directional bias. Next day, we close above the previous day, so we are bullish. Another L. We have rejected the previous day's high. So you guys know by now, if we reject, our bias is in the opposite direction. So we close below, so our next day, you're going in the same direction. Wrong again. We closed above the previous day, so the next day, we are bullish. We had another close above the previous day, and the next day is actually the last day. So according to our system, what's the next candle supposed to be? Bullish. So I hope that this concept makes sense and it's simple enough to understand. So let's look at the results. That's our monthly trading days. We only have 20 days unless you are trading crypto or synthetic indices. So out of 20 trading days, you're correct about the direction 13 times and wrong 6 times. And obviously you're only gonna trade the price action that makes sense on the lower time frames, which are the things that we always cover in this channel. So it doesn't mean that you're always going to take a losing trade on a day that you are wrong about the direction. But it is better to look for one thing in order to protect your psychology. So that's it for this video, guys. Thanks for your continuous support. Please like and subscribe. Until I catch you next time, das wird dann.